Good afternoon, everyone. Thank you for attending and great to see everyone here. Now, over the past few keynotes, I've heard stablecoins being referenced so many times. So let's talk about it. And we've got a great lineup of panelists today, experts in issuance and great critical partners in this ecosystem. So without further ado, let's get straight into the nitty-gritty. The first question I'd love to ask of Rita, I'd love to understand more about what you and your team at RD are working on the stablecoin front. Who are the customers you're looking to target? And also, what are some use cases that you're excited about?
Okay, straight into questions.
Straight into questions. Well, 40 minutes is going to go very quick.
Yeah,
so.
very happy to be here and be sharing the stage with pretty much everyone here is our partner, is RD's partner actually. So RD's, we were actually looking to bridge Web 2 and 3, and with our, one is the stablecoin, another one is the RD wallet, which is the SVF licensed fiat wallet for businesses as well. So our stablecoin HKDR is a fiat pegged stablecoin, 101 to Hong Kong dollar. We have been working with Hong Kong AMA on getting into this regulatory sandbox. In terms of use cases, besides obviously servicing the investors and users in this region, which basically has a lot of very active and affluent institutions and individuals, that's an obvious use case. We're also very big on cross-border payments and RWA, which are the use cases, what I call make the cake bigger, right? So we always talk about the current stablecoin market cap is 150 billion. Wow, so big. But actually compared to any traditional financial market, FX market, payment market, it's still very small. So we want to make the cake bigger by bringing stablecoin, really bridging Web 2 into Web 3. And to do that, compliance is very important because we are talking to lots of Web 2 companies, payment companies, traditional asset managers. They're standing on the fence because they don't know about what's going on the regulator side, right? So Hong Kong is standing at the forefront of stablecoin regulation. So we are riding on that wave to provide a trusted, transparent, and compliant stablecoin. We're working with tons of partners, including different chains, different market makers, including Cumberland, and different exchanges around the world. So we're very excited to bring this into the market.
That's helpful. There is so much to unpack there, and I'll do that one at a time. We've got 37 minutes to do so. Let's talk about, focusing on use cases first. On home turf, we talked about HKDR, which is very exciting. And Ragulan, Circle, hopefully, and USDC doesn't need too much of an introduction. But given your role in the region and all that, has any of the use cases Rita shared resonated with you, or anything else that you'd like to add to use cases you're seeing with USDC, aside from trading and on-ramp and off-ramps?
Yeah, thank you. My name is Ragulan Pathy from Circle, obviously very well known for USDC, second largest stablecoin, US dollar stablecoin. So I think, everyone knows the use case for trading in crypto markets with stablecoins. But what we're seeing also now is roughly around 30 to 40% of stablecoins, especially US dollar stablecoins, are held for non-trading purposes, right? So by volume, you'll see it mostly in trading. But if you look basically throughout the whole of Latin America, so the whole of Africa, even certain parts of Asia, they almost don't have functioning currencies anymore, right? And so people are looking for a stable way to hold money. And a crypto wallet and a stablecoin is effectively a US dollar bank account. It's a replacement for a US dollar bank account. The other thing also is that banking has made it harder and harder for those who want to bank to do it effectively. And I mean that through many means. First, actually opening the account itself is proving to be difficult if you're not, it comes with so many restrictions. Secondly, I won't name the bank, but I sent some money to my personal lawyer in the Cayman Islands, and I had 5 calls from my bank to ask me why did I send not a significant sum, like $25,000, to my lawyer. And I was wondering, why am I having all these questions? Why is banking so permissioned that it's my money, I'm sending it to a legitimate law firm? Why am I getting so many questions on it, right? And so I think this is really where crypto is providing an alternative and stablecoins are providing an alternative because people are realizing that once you on-ramp into stablecoins, and traditionally it's been a little bit difficult to, but it's getting a lot easier. Once you're into stablecoins, you start questioning, why would I come out of stablecoins? You're also seeing other things such as the increasing use of, for example, credit cards through which you can spend your stablecoins as well. So people are not having to like off-ramp it back into cash and use it. If they get paid in stable, like a lot of startups that I speak to, especially like Web3 native startups, but honestly, even like remote first startups around the world, they're basically saying, we're not going to have bank accounts. We're going to have employees all over the world, and we're going to pay them all in stablecoins. And then they're looking for applications through which they can spend those stablecoins. So you're seeing this happen, and this is just proliferating. And the one thing I would say about stablecoins is that stablecoins are a network effects business, right? So initially, that network effect started with trading. Now it's come into holding stablecoins as a replacement for your bank account or US dollar bank account in particular. But the more and more people that have crypto wallets with stablecoins in them. So it's roughly around 20, 30 million people natively having a crypto wallet. If you include exchanges, it's 1 to 200 million. We're about to see a huge hockey stick in the use of wallets and people in crypto with this bear market, this bull market, I should say. It's going to go to more than 1 billion people. And when it does go to 1 billion people, and a lot of those people are holding stablecoins, you're basically going to send stablecoins to people, and they're going to keep it. Like I keep my stablecoins. I use it for trading, but I also use it to pay people and move money around, right? And so that's why I think you're about to see this moment where stablecoins are about to take absolute liftoff. We're at 150 billion now. I think we're going to go to $1 trillion plus in the next few years.
Just one thing to add to that, very interesting data that over 20 million addresses that hold stablecoin nowadays, they're already only holding less than $100. So that means lots of actually stablecoin users are not using it for speculative purposes. They're actually using it for low value, high frequency transactions because it's a no-brainer, right? If you send money from Hong Kong to Brazil using traditional DTT, probably $20 you'll be using to pay the fees. So it's a no-brainer. So I think there's a huge potential for stablecoin to play a bigger role in cross-border payment, in payment in general.
Yeah, agreed.
No, I love it. This is great. I think this is all about the real-life applications of our other application of stablecoins, which is very exciting. And let's actually unpack a little bit about that. So cross-border payments is something with stablecoins, something we've talked about for actually a couple of years now. And yet today, someone in the audience or anyone, for them to do that, maybe a non-USD version from Hong Kong to Japan or Hong Kong to Australia, it's still a bit challenging to do that. What's, just for anyone in the audience, and maybe even Paul as well, in terms of your, I want to show the report you referenced last year, authored last year, the growth potential of non-USD stablecoins. What is, I guess, what's stopping this from happening? Cross-border payments may become a reality.
I would actually say cross-border payments are already happening to a really large extent through stablecoins. I would say that that's probably one of the main reasons that people are using USDC, USDT, and PYUSD. It's to move value from one country to another seamlessly. Now, I think the question you're asking me is why is that not happening in non-dollar currency? And we can definitely tackle that. But I think it's really important to note that if I want, as Rags is saying, if I want to move dollars from Hong Kong over to Singapore, just staying in dollars, that's going to take 48 hours. And my bank might call me up and ask a lot of annoying questions. And the correspondent banks might, just bounce the transaction. And by the way, if I'm actually changing currencies, I'm probably going to get a 1.5% charge on the FX trade. So that's a terrible process, and stablecoins just absolutely fix it. There are many, many companies that we work with at Cumberland who I would not call Web3 companies. I would call them Web2 companies that are just using stablecoins to make their life a lot easier, right? We have companies that are basically taking funds from Hong Kong and using it to pay factories in Mexico, right? And they're just moving dollars across borders. And in the past, they would have done it with the banks, and it would have been a real pain. And now they're using stablecoins to do it, and their life is a lot easier. And they can do it many more times, and they can move money not just more quickly, but also more frequently, because you get to get more cycles in. Now, to your question, And we talked about this in a report, which I'm going to re-shill here. It's called the Market Potential for Non-Dollar Stablecoins. It came out last June. And in this paper, we explored, okay, 99% of all stablecoins are US dollar. Rags and I have a little disagreement. He thinks it will stay that way. And there are certainly reasons why you would see the dollar being the dominant currency in the stablecoin market. For one thing, it's the dominant currency in markets in general. 60% of M1 money supply is in the US dollar. So I would actually, just coming from, a very naive point of view, I would expect 60% of stablecoin issuance to be in dollar. And obviously, we're very, very far from there right now. The other thing that I think Rags was alluding to is a lot of the product here with stablecoins is the stuff that we like to talk about. You can move it seamlessly cross-border. You can have interoperability, very cheap transactions. But a lot of the time, the product is the dollar itself. When you look at how much stablecoins are used in Latin America, in Turkey, in Northern Africa, there's a lot of stablecoin usage there. And it has nothing to do with the fact that it's on Ethereum or Solana or Avalanche. The product is the dollar itself. It's dollared for unbanked people, and that is the product. So that 60% number that we see in M1 money supply, I tend to think it'll be a higher number in stablecoins because it's opening up the dollar to more folks. With that said, I still think there's a lot of room here, right? Something that you touched on is the need to do FX transactions, right? If let's say we wrap this panel up, we all go out for beers, and Charlie picks up the bill. And Charlie lives in Australia, I live in Singapore, and I say, okay, cool, I'll pay you tomorrow. I'll send you $100. Maybe the drinks will be more expensive. We'll see how the panel goes.
We're going to have a few, right? A few drinks.
A few drinks. Okay, I'll send you $200. So now I am sitting in Singapore. I have a bank account in Singapore dollars because I get my salary in Singapore dollars. And I want to send to Australia. I want to send to AUD. Circle's not going to help me much here, right? I can go through USDC, but it's going to lead to a lot of transactions. Now, if instead I can take my Singapore dollars, use that to mint a Singapore dollar stablecoin, convert that, whether it's with an OTC desk, I can do it on Bitstamp or Kraken, maybe I can do it on Uniswap or a separate DEX that hopefully Cumberland Labs will build to do exactly this. Now I can swap it into AUDD, an Australian dollar stablecoin, and then Charlie can redeem them. And that whole thing can take place in 5 minutes. And the bid-ask spread I'm going to pay on the FX is going to be, not 1.5%, but 5 basis points. Like, this is a killer use case. This really opens things up. So I do expect to see this develop because it's a good product. Now, why it hasn't developed so far, I'm sorry, I'll stop talking in a minute. But why it hasn't happened so far, it's mostly from the regulatory standpoint. Stablecoins are supposed to be boring. There's not supposed to be a lot of guesswork. You're supposed to say, okay, here is the regulator that has signed off on this and is okay with this, and now I feel safe going into it. Over the past 5 years, we haven't really had that in a lot of jurisdictions. Even in the US, it's still a little bit up in the air. What we see now is we see regulators starting to come to terms with what stablecoins are, and more importantly, how stablecoins help them from a monetary standpoint. So here in Hong Kong, there is a regulatory sandbox that basically says, okay, you want to launch a stablecoin here in Hong Kong? Here's what you have to do. Here's what you have to build, and here's what you have to prove. We see this happening in Europe, where MiCA has said, if you want to be a stablecoin, this is the license you have to have. And we've started seeing exchanges take this seriously. We've seen some of the largest exchanges announce that they're going to delist some stablecoins, some of the largest stablecoins, because they don't have this license, right? Well, guess what? The only ones who have this license are European stablecoin issuers. And so I expect to see European stablecoin really grow as a result of this regulatory catalyst. So I think this will be a big year for it. The regulators are coming on board. The exchanges are starting to realize how important it is. So you're going to start to see a lot of listings. And we're ready for it. We've been ready for it. We're excited about it.
Yeah, so just want to jump in. Sorry, John. Just one thing to add there, we've been saying that, it hasn't happened yet. I think one big one big reason is this region hasn't really joined in yet. And this region runs one of the biggest payment market in the world. Why? Because this market fuels the biggest export market in the world, as we all know, right? So there are tons of payment companies here processing payment internationally for merchants who are selling from this region to the world. So there's lots of payment volume flowing through this region, flowing through Hong Kong and Singapore. And lots of Web2 companies, they cannot, they don't feel comfortable joining into this space yet because of the regulatory clarity issue. So I think Hong Kong is standing at a very historical point to really bringing these volume into Web3 and make payment or stablecoin mass adoption use case for payment. Yeah.
That's really exciting. And the elephant in the room is regulation. But before I go into that, I need to ask Jordan a question.
Just really want to hear about Ton. So.
Yeah, as do I, yeah. So look, Jordan, with stablecoin transactions that we're talking about, the blockchain, the protocol is extremely important, and no exception to Ton. Please share with us, what is Ton for those that don't know, and what are your thoughts on application of stablecoins on your ecosystem?
Sure, certainly a lot to think about after hearing answers earlier. But so Ton is the open network. It's a blockchain that focuses on, through a lot of partnerships with Telegram, offering financial services and offering access to crypto to a lot of people who have Telegram and have their network on Telegram, but don't yet use crypto in a large fashion. So for some of us, we have a lot of our network already on Telegram, and it's a really easy thing to go, hey, like I'll use these different services and while on Telegram to be able to manage my Ton. I think that one of the interesting things about stablecoins from the product builder perspective is it is oftentimes one of the most familiar assets for someone who doesn't know anything about crypto. It's like, hey, I kind of know about this fiat, I know about the US dollar or my local currency, and the ability to go and make the leap not from like fiat that I own to some crypto that I don't know how to value, but make just one step, saying, okay, great, this is a different way that I can interact with money that I know the value of. I think one of the interesting things we've brought up has been cross-border payments. And man, it's a hard problem. How do I go and pay someone in a different country? But the really neat thing here when we talk about stablecoins is if we have more and more people or companies going and transacting in stablecoins to solve their cross-border problems, then it becomes a lot more familiar when you have to go and pay someone in your own country. Why am I doing this on fiat rails, right? So I think a lot of the headroom that we're talking about and growth in stablecoins can be from us kind of starting with this cross-border payment and starting with this holding wealth or having a US dollar bank account and being able to expand the pie to other transactions I might do in my local banking system. At Wallet on Telegram, we're really focused on this, bringing people who have not used crypto before into the fold, and stablecoins are a really familiar way for us to accomplish that. And so obviously for a blockchain, it's great having a asset that you can denominate different dexes or different assets in. It makes it really easy if we're splitting drinks or otherwise paying each other to go and manage stablecoins instead of other crypto. And finally, it's just really nice in the case of working on Telegram that you already have all the people you need to pay. Like hopefully you can talk to your lawyer on Telegram. So there's a lot of other options that you have combining the stablecoin and the kind of crypto infrastructure that Ton brings with the network effect that we already see on Telegram. So that's why I'm kind of excited about this in the next couple bits.
That's helpful. Thanks for sharing. We've unpacked a lot about use cases. I'm sure we can go on for hours about this. So that's the first elephant in the room about use cases beyond trading. Let's talk about the second elephant in the room, which is regulation, which has already been alluded to. Going back to home turf here in Hong Kong, a lot of, activity from Hong Kong Monetary Authority, SFC, consultation papers, frameworks, and sandboxes. Reed's love to ask you again, what's been your experience dealing with the regulators here? Just maybe share about your perspective on the regulatory environment here in Hong Kong.
Yeah, sure. So I'm not the regulator, so I cannot represent them. But as a player, we've been working with the regulator here a lot. I think like in terms of regulation, we will always think it's not fast enough, right? But I think in Hong Kong, it's actually developing pretty fast. Since last year, there has been lots of regulation coming out to all kinds of different sectors in crypto. Stablecoin, last year we had discussion paper and then consultation paper. Now, 2 weeks ago, MA just announced the start of the regulatory sandbox. We're just about to we are working with them on that. I think in terms of fast or slow, going back to the point Reg just mentioned, stablecoin is a network effect business. So to build a network, it's not going to be easy, right? So it's something that's going to take years of hard work. And I think it's similar to in terms of working with regulator. There will be lots of push and pull in the process. We need to interact with them about what's happening in the market. They are very keen. The regulators in Hong Kong are very keen to understand what's happening in the market. So we need to work with them very closely. But it's going to be a push and pull process, and it's going to take time. But luckily, to build this network, I think with Web3, because I have both payment and crypto experience coming from the space of Web2. What's good about Web3 of building a network is its openness, right? It doesn't have walled garden. So in the Web2 world, if I use PayPal, I cannot send PayPal's money to Alipay's wallet, right? It doesn't talk to each other. But in Web3, it's open, right? As long as we're on the same chain, even we're not on the same chain, we can transfer value. So with that openness, it's actually easier to build this network. So I think it's going to take years of hard work to build this network, and together with the regulator. But I think it definitely has this innate power of openness to for us to drive the shaping this network together. So I think that's my 2 cents about regulation. It's going to take time.
Yeah, I mean, USDC, we're regulated in many markets around the world, and we're constantly looking to get licenses in more and more countries. I guess the one thing I would say about regulation is that we see the different rules amongst the different countries, and it can be a little bit tricky because, if you're an incumbent financial powerhouse like Hong Kong or Singapore or New York, you have to service your current regulated customers, your banks primarily, and they will have certain requirements that you've put on them. And at the same time, what we're trying to do is bring the technologies of crypto and the openness to essentially break down a lot of these barriers and these layers that have happened so that money can move a lot faster, right? And so what you see is this friction between the crypto way and the banking way. And it's a very fine edge that the regulators have to balance. They have to balance this, which side do we want to be on? I feel for them because it's difficult. If you're in a market with no banking industry really, I would almost argue a place like Dubai, for example, doesn't have a huge financial services industry of note. They're much freer to make rules. Actually, frankly, they haven't moved that fast anyway, but they're much freer to make rules compared to somewhere like Hong Kong or Singapore who have rules for the banks already. So it's tricky, and it's unfortunate because sometimes you see them trying to have the same rules like capital requirements and other things which don't make sense for the stablecoin business. Or, for example, in the UK, they're proposing that you can't earn interest off it, which is ridiculous because, how are they going to make money, frankly? It doesn't make it a viable business, right? In the EU, they propose limits on the size of stablecoins, So these sort of rules are not good. The one thing I would say about Hong Kong in particular is that Hong Kong is this unique center that has always bridged Asia and the US in particular. It has very unique banking rails that connect US dollar offshore banking to back all the way back to New York, right? You can move money US dollars same day, right? And for stablecoins, what most people don't understand is that you need a way to get in and out of those stablecoins. And so what licenses and regulation do first and foremost is it allows stablecoin companies to have banking. And when you have banking and people can move money very quickly, especially around the world, they can get in and out of those stablecoins quickly. That's a fundamental piece of the infrastructure. So my comments really are just I hope that regulators stay pragmatic and start thinking about okay, like what the end goal is, which is making money move faster and simpler and cheaper. So they don't put the same old banking rules on us and take a common sense approach. And the second thing is, I think the regulator, and I think HKMA has done a good job of this, has to go hand in hand with the banks. Because even if you get all the regulation in the world, and I've seen this in other places, if you don't get banking, it really doesn't take you forward. So you need both the banking as well as the regulation, as well as the stablecoin companies working together. And when you do that, and I think Hong Kong has a unique opportunity to take control of this, right? Because no one, frankly, in the world has done this perfectly. But if they get it right, it could become the center of banking for stablecoins, not just in this region, but globally. That is absolutely up for the taking if Hong Kong wants to take it. So time will tell, like we'll see. They're making very, very good steps. We've got banking here. We're working with the regulator here, but time will tell whether if they take full advantage of the opportunity presented.
That's helpful. A lot of good insights. And I think just to clarify, I think we've skipped the stablecoin 101 in terms of what different categories of stablecoins there are. Obviously, in the scope of this conversation, it's all around fiat-backed or fiat-referenced stablecoins in the terminology of the HKMA. So I just wanted to frame that in that context. Now to the ecosystem partners and stakeholders. In terms of how do you decide what stablecoins you work with, to both you, Paul, and Jordan as well? How does this regulation play an influence in your decision-making, or what are some of the criteria that you will look at for partners in stablecoin ecosystem?
Yeah, there's two sides of this, right? There's what is the opportunity and can we do it? From the opportunity standpoint, what we don't like to see is an issuer saying, hey, Circle made a lot of money issuing a stablecoin, we should do that too, right? That's not a good start. What we like to see is, here's a use case. Here's something that we want people in our area to be able to do, and stablecoin solves the problem. If you've got a solution in search of a problem, like it's not going anywhere, and we've seen that too many times. But instead, who is going to be using your stablecoin? Is it going to be for cross-border remittance? Is it going to be so that I can open up my Telegram app and I can scan a QR code and I can pay for some chicken rice? Is it going to be so I can trade crypto? Is it going to be whatever it is? You need to have that use case and you have to start there. And we see a lot when we speak to issuers who want to work with us, a lot of times they don't have that. And like that doesn't excite us, that doesn't get us going. The next thing is like, can we work with you, right? The last thing we want, the thing that frankly kills our business, is to work with a stablecoin that depegs, or more accurately, that unpegs, right? That stops trading at $1 and never trades at $1 again. That's the worst case scenario. And so we, over the course of the last year, developed a very onerous due diligence questionnaire that Rita's team, and I think Justin filled it out over there, filled out, and we ask about 35 different questions about the stablecoin. Who do you bank with? Where are you holding your reserve assets? What type of reserve assets are you holding? What happens if you go bankrupt, right? Am I still going to be able to redeem my stablecoins in that scenario? What blockchains are you on? Et cetera, et cetera, et cetera. We ask about 45 different questions. It usually takes teams at least a week to get back to us on this. But at the end of the day, we want our stablecoin partners to be as boring as possible, right? I don't want these really cool mechanisms with these really novel approaches that should work and should generate something awesome. No, I just want boring. I want to know that if I want to buy the thing, I can buy it for $1, and if I want to sell the thing, I can sell it for $1. Because then as a liquidity provider, that enables us to go into the markets, and when someone asks us for a bid, we say one bid. Someone asks us for an offer, we say one offer. We don't even need to think twice. When it starts floating around and doing funky things, like that's kind of where we get a little bit nervous. And frankly, especially if you're thinking about enterprise use cases, these institutions, they're going to get nervous too, right? So these questions that we're asking, these are the same questions that, the guys who are bigger than us are going to ask 10 times as many times.
So Paul, you mean we're just a bunch of boring people working together? Yeah,
it's a boring business. You're not boring people.
Yeah. So I totally agree. I think, going back to my point, it takes, if we compare this to the existing networks, right? It took the existing continent network almost 100 years to build the network today. So we're just a few decades, not even, right, into this. So we're early, I think one thing I always say, in this industry, that's a double-edged sword. It's probably a barrier, but it's something good too. Is that there's too much money, right? So people want quick money, but this. In terms of stablecoin, I think if we want to make it really big, reaching some of the target that's where the estimations, some of the reports estimated like $3 trillion in 5 years. It's a boring business. We're gonna need to build the network, build the use case, build the adoption. So I totally agree, Paul.
For the record, I don't think you're boring.
Yeah, thank you.
Sure.
One of the hard things we've noticed in scaling to like millions of people in different jurisdictions is stablecoins and assets that are widely accepted and that are trusted are the ones that win. And I think it's really interesting. We had this whole conversation about having a US dollar denominated bank account. And for a lot of the world, that is the product, right? It's like, oh, great, I can now buy a US denominated stablecoin. I think that there's a lot of work that we can do to have stablecoins that are trusted, and we know where the reserves are, we know what they are, and again, they might be boring, but they're very well accepted. And for a lot of these countries, honestly, payments is a local problem in all cases. Someone needs to go and get money on chain. And so the more options and the more variety we have and the more regulators working on providing frameworks and providing kind of a way forward for these is only going to make it easier for people like me and like Wallet trying to build products, because there will just be more options for someone trying to go and become a user. And I think that's what's really exciting is we got to solve this for a lot of people, and seeing the variability and seeing the different ways people are tackling it is really promising from the kind of product perspective.
I'm personally really looking forward to the cross-border use cases. I've been talking about it for a while, and I'm going to keep working out. I'd love to one day be able to send Aussie dollars on chain to Singapore to pay for the beers. There was a conversation earlier on that was, I think we heard, Paul, your perspective of why you think we're going to see a future where it's not going to be 99% USD denominated stablecoins. Ragulan, question's going to come to you on this one. Love to hear the other side of the discussion on this one. And
Might go to 98%, maybe.
On 150 billion, that's quite a bit.
I mean, like, there's a simple reason. We should separate the activity with stablecoins from the amount held. And so what happens is that, like, you can ask most people in this region, like, if you had a choice of currencies in stablecoins which are in your wallet, relatively free of government permission, like, which currency would you choose, right? And the reason is that everyone knows what a US dollar is. Like, you go to any country in the world, you ask a person, what's your rate compared to the US dollar? They know. They don't know it against any other currency, but almost guarantee they know against the US dollar. It's not to say that there's no purpose for local stablecoins, but ultimately I think they're the end bridge that bridges between the fiat system in that country into that local stablecoin, and then into US dollars for either sending it to another part of the world, for trading assets online, whether that's crypto assets or tokenized real-world assets or other things as well, right? But for that reason, I don't think you're going to see it replicated what you see online. Also, if you look online, like, the majority of just goods are bought in US dollars or priced in US dollars anyway, right? And much like if you use a Visa card, it might have your local currency, even if you're buying in US dollars. You could use that same analogy for stablecoins in US dollars versus a local stablecoin. Your local stablecoin is the settlement currency. Eventually, like, as there's more and more of them, that'll be the end settlement currency for a lot of people, but the pricing and the movement of money will happen in US dollars. Also, what's important is liquidity. And so one of the hardest things that local stablecoins have had is just getting liquidity and getting from that 0 to 1, because there's not that much use for them. So if you look globally, I'm struggling to think of any other non-US dollar one with more than 200 million or so, maybe 300 million maximum. And, like, US dollar stablecoins are 150 billion, right? So I think they may get to 98% if you're lucky, Paul, like I said, but they'll be a very, very good settlement currency. And I think I'm seeing that in Aussie dollars. I'm seeing it in Singapore, and lots of currencies. We're seeing local stablecoins for that end settlement, but people aren't necessarily holding it in that currency or sending it to somewhere else. They're converting it into US dollar stablecoins.
I think I can definitely agree with Rags on one thing. It's really important for these non-dollar stablecoin issuers to find a good liquidity partner. Yeah. Get that liquidity from 0 to 1. That is extremely important.
Yeah, and just I guess it's not really disagreeing or whatever. It's just a different angle to look at this. I think definitely agree. Local stablecoin is providing that bridge between the fiat in that region to stablecoin, right? But at the same time, I think the status quo is there's no other compliant, reputable, transparent alternative to customers around the world. So right now we're talking about the status quo. We only have US dollar choices, right? So I think in terms of Hong Kong dollar, there's a strategic, advantage of Hong Kong dollar, which is it's pegged to US dollars. It's a peg of it, peg. Yeah, so it's pegged to US dollar, but it's not US dollar. So in terms of the stability of the currency value, it's stable, like US dollar, but it's not US dollar. So for certain corridors and certain segment of the market, it's another very good alternative. In Hong Kong specifically, which we all know there's lots of affluent institutions and individuals here. In the about, I think, 20 trillion deposit here, in the past decades, it has always been half and half. Half in US dollar, half in Hong Kong dollar. Why? Because people want some diversification. So I think that's something specific to Hong Kong dollar I want to mention here.
Yeah, I think the thing that also I should mention that really makes it hard for Hong Kong dollar or Singapore dollar or Aussie dollar stablecoin is you have good banking. A precursor to really good stablecoin usage is shit banking.
Absolutely.
If you have really bad banking, people want to use stablecoins because they ultimately are looking desperately for anything else. But in a lot of Europe and very modern economies like Singapore and Hong Kong, you have instant payments. So it makes the reason to get into a stablecoin less because you can move money in large amounts instantaneously within the country. Even offshore sometimes is pretty good. And so there's less, But if you go to somewhere like, even within this region, like in Indonesia or some large economies, India and others, like banking's hard. You have to go and fill out paperwork for like 3 weeks to like move money overseas sometimes, right? And you have to have a pile of documents. If you want to open an account, it's not black and white who will open that account. You have to sometimes go through illicit means to try to figure out how to get an account open with a bank, even with normal documentation. These are perfect circumstances for stablecoins because people are just fed up of banks and they're like, okay, I need to find an alternate where I have full control and it's much faster. So actually, conversely, really good banking economies actually hamstringed by their own success of how good their banking is for the stablecoin market.
40 minutes goes by very quickly. So I know we can go for hours on these topics. Just to wrap up this conversation, and I'll start with Jordan this time. Just one thing you're looking forward to in the next 18, 24 months on stablecoins. And if anyone wants to get in touch with yourself or your organization, what's the best way to do so? And I'll ask the same question across the panel.
Sure. I'm really looking forward to the ability to use stablecoins to onboard a lot of users in the most familiar way possible. I think that in some cases, the best product is the most transparent product. So the less we spend thinking about what it is we have and the more we spend using it, the better we'll be. You can find either us at the TON booth in the conference, or you can go to wallet.tg if you'd like to talk to Wallet on Telegram. Thanks for having me today.
So I'm really looking forward to seeing some of the crypto exchanges that we've worked with for many, many years to trade Bitcoin and ETH and all the other great stuff. I'm really looking forward to seeing some of them embrace this new role and saying, oh, we can be an FX venue as well. And so I think we're going to start to see the listings of some of these non-dollar stablecoins, and this brings a totally new angle of trading to these exchanges, and that's something I'm just really, really excited about. And I think we're going to see that in the next 2 or 3 months. I think that'll start very soon.
For me, there's no bear market for stablecoins. You would have seen in the previous bull market, it reached a point, and Bitcoin may have fell 75, 80%, but stablecoins only came down like 10%. And so I think the best thing is this huge bull market that's going to happen is going to see stablecoins go from 150 billion to maybe 300, 400, 500 billion dollars. And then when the bear market comes, and even if crypto prices fall 80%, people will stay in stablecoins and they'll just use them for other things. And then when the next bull market comes, it will go from 500 billion to a trillion, and it will just continue upwards, right? And so for us, bull markets are exciting because it puts stablecoins in the hands of so many more people. And once you get it, like there's no going back. Like it's just that simple.
For me, I'm really looking forward to the launch of the one of the first stablecoin that's really approved and recognized by regulator in Hong Kong, and working with partners such as Cumberland, Tong to make the cake bigger, to make the stablecoin cake bigger, and bringing this to the mass adoption, and also working towards the goal of 40% of market share for non-US dollar stablecoin. Yeah, so I'm really looking forward to that. I guess the next 18 months will be just the start of that long journey.
Action-packed 40 minutes. I'm sure we can go for hours. Please put your hands together for an esteemed panelist. Thank you very much.